Hello, this is Richard Pears from FinextraTV, and I'm joined today by Will Armitage from Route2. Will, thanks very much for joining us today.
Thanks, Richard.
We met at a climate change theatrical performance in the City of London talking about sustainable finance, and as everyone knows that we're trying to establish the veracity of data coming from companies, corporate supply chains to help the financial services industry understand its risk and its opportunity. But you guys have some really interesting angles on this and some interesting stories. Tell us a little bit more about one or two of those stories, and then we'll get back to a little about you and the company.
Yes, thanks, Richard. Route2 exists to help both our corporate clients and investor clients ultimately understand, quantify and measure their societal impact. And a good example of a piece of work we did with the Crown Estate was the development of their Total Contribution Initiative. And so it's a framework that helps them understand what is our total economic contribution. And we do it across the value chain and across all sustainability dimensions.
So when we look at this and just sort of frame it, I know the Business Roundtable people read a lot about that, where they started to talk about people, profit and planet. And so you guys are focused in really on that sort of the people and the planet piece, in addition to the work we've always tracked in terms of the accounting financials. How do you go about judging the scope of that and then quantifying it in the way that you were describing?
Yeah, in terms of scope, when I talk about sustainability dimensions, there's fairly accepted convention that a company relies on its human capital, its intellectual capital, social capital, natural capital, alongside manufactured and financial capital. So we hear a lot about the 6 capitals. And if you accept the notion that resilience is based on maintaining and enhancing all those capitals, the ones you're in control of, the ones you're not in control of, through your supply chain, through your products and the way you run your business, we have a total capital accounting framework which can be applied to various different parts of a company's operations, and it helps them capture and quantify and evaluate whether you're enhancing or eroding those capital stocks.
Mm-hmm. So, I mean, one of the great examples I love was, you obviously have a lot of building infrastructure within the Crown Estate in the west of Westminster and so forth. And they talk there in the case study about greening of the roofs so that you can connect the parks out to the suburbs, etc. How on earth does that sort of turn into something of value in your framework?
It's about understanding that there's a value to biodiversity, and so what the Crown Estate have tried to do is create these green corridors alongside and in collaboration with other landowners as well. But just focusing on natural capital, for them we also help them understand what's the value of their rural holdings, particularly something like Great Windsor Park. So it's about understanding what is the ecosystem service value of this land, what's the value of the recreational amenity, its other ecosystem services like flood attenuation. And so capital accounting allows us to capture the entirety of the value that's being produced by any economic entity.
And what sort of outcomes has that generated? So you've gone through that process and you've generated these reports. What has that achieved for the organisations that have gone through this?
I think the key thing is there's increasing pressure on corporates and investors to understand both the purpose of a company, its wider societal contribution. And so when we're talking about externalities, for an organisation that wants to understand how it can best articulate its sustainability efforts, it serves that purpose. But all these externalities are just that until they land on a balance sheet. And so part of what we do is to help our clients understand what scenarios, what pathways might prevail that mean that a societal cost might one day become an internal cost or a benefit as well.
So I think it's really interesting when we pick up on those comments and we talk about how do you actually intersect into the world of sustainable finance and bring this quality of data to them. How do you actually see your intersection into that industry?
Yes, and it's interesting. Route2 occupies a pretty unique position on both sides of the corporate and investor fence. So we understand the data that corporates are disclosing. We also understand how investors are looking for better data, more meaningful data, and data that's actually decision useful, data that helps them construct or reconstruct a portfolio that's both maximising financial returns and societal returns. And when we talk about, we mentioned externalities, which of these societal costs might one day affect the creditworthiness of that constituent within a portfolio?
Absolutely. And so the data, this again is always the crux of it. You get your data from quite a variety of sources. Tell us a bit more about that and the sort of technology direction that you're applying to this.
Yes, currently data is available from a number of sources: peer-reviewed literature, global reports on child labour, modern slavery, water stress reports. But there's a varying frequency to how the regularity of the updates on that data. So technology for us is a way of improving the frequency of data, the quality of data, and whether we're looking at using Earth observation data for that top-down view on soil condition, water stress, human rights events now, ground source data, on-the-ground insight, data mining, and open source intelligence. All those sources will help us improve both the types of data we're collecting, the quality of data, the frequency of it, and also to establish how is that data going to inform our view of whether an impact is relevant, and also at a company level, change our perception as to the creditworthiness of a particular company.
And how do you see that in terms of the tech? Are you going to be scaling this up from essentially a consultancy-led organisation originally, but to become much more of a kind of global player using the tech? Just to conclude, how's that going to look for you?
Absolutely. Scaling is key for us, and technology is a key part of that scaling journey. So we're developing some of the technology in-house. We're working with others to apply, for example, Earth observation technology to our existing investor analytics tool. And all those things combined will ultimately lead to a tool which is available on a subscription basis.
Thank you so much. Absolutely fascinating to talk to you. I'm sure people can go and check out a bit more about Route2. But today, Will, thanks very much for your time.
Thank you.